Well, I think inflation is cooling, but the question is it cooling fast enough to stop the Fed from additional rate hikes in the near term? I think the answer is no. I think you have to look at core CPI month to month running at 0.4, and that's still worrisomely high in my view. And if that pace of increase is maintained month after month through the balance of the year, you're still going to see a year-on-year core CPI of around 5% come December. So that's well above the 2% inflation target. So that probably I think the Fed's going to conclude they have more work to do. They hike in May. It's potential that inflation will continue to cool from here. I have some doubts about that over the next couple of months, but I mean, it's possible. If it does, then maybe the Fed is done at 5.25. Where I think I have the biggest objections are the rate cuts that are now priced in out over the next year.
Okay, so expand on that for me, because we have banks like Standard Chartered, for example, saying there's now an 80% chance of a recession in the United States. The Fed has also conceded in its latest minutes that the banking crisis could perhaps push the economy there. So that would signal that perhaps a reverse in cuts is coming. Do you disagree?
Yeah, I do, actually. I think if you think about what the Fed is talking about, they see, or they would like to have, a period of slower growth, maybe even a recession, to achieve the end of bringing inflation down. They see it as perhaps a necessity. And some of the contraction that we are seeing in credit conditions, lending standards, might aid in bringing inflation down more quickly. So I don't think they are going to pause and then pivot to forestall a recession. They might even welcome it to achieve the 2% inflation target, because they're far away from that at the moment. So a recession is likely, I think, in the next year. I think that's right. Maybe a 60% chance is what we're putting on it. But inflation is too high for a pivot at the time being.